Let us do the other adjustments in greater detail. Adjustment with respect to outstanding expense. What is an outstanding expense? As per our accrual concepts, all expenses for the current year must be brought into the books of account, whether paid or not. Whether paid or not. So expense, what is an outstanding expense? It is a liability. It is an expense which has not been paid. It is an liability, an expense which is not paid. Expense not paid. So, if we take an example, let us say the firm has the practice of paying its employees on the 5th of the next month. So, salaries are paid on the 5th of the next month. Now, what happens when you come to the end of the year on 31st March? The salaries for March, let us take a figure of 40,000, is not paid because it is payable, or the company will pay, the organization pays it only in the 5th of April. However, 31st March, the books of account are being closed. Therefore, this 40,000 must be recognized as an expense whether or not payment has been made. Whether or not payment has been made. So basically, an accounting entry is passed which is to debit salaries. Why? Because salary is an expense. It has to be brought into the books. And the entry, what are the two sides of the transactions for this? One side is salary, the other side is the employee's account, the employees to whom the salary is due. So our entry is salary account debit to, we do not write employees. Whenever an expense is payable and has not been paid, we call it outstanding expense. So salary account debit to outstanding salary, or whatever expense account debit to outstanding expense account. That is the accounting treatment. Increase expense, create a liability. When expenses are due at the end of the year, what are the two sides? There is an expense account and there is a liability to pay the expense account. So entry expense debit to outstanding expense. So what is the nature of this outstanding salary account? Outstanding salary account is nothing but the employee's account. So this is employee's account is a personal account. This is actually called a representative. It is called a representative personal account. So what is the nature? Personal account, since it represents the accounts of the employees to whom it is due. So the expense account debit to outstanding expense. Outstanding expense is a personal account representing the accounts of the person to whom money is payable. Now, normally this appears as an adjustment entry. This appears as an adjustment entry after the trial balance has been prepared. The accountant might have realized that this particular salaries is outstanding, and therefore we now pass, outside the trial balance, we now pass an entry salary debit to outstanding salary. As a result of passing this entry, the salaries account in the profit and loss account will increase, and the outstanding salary account is a liability and would therefore be taken to the liability side of the balance sheet. If we were to find an outstanding salary in the trial balance, an outstanding any expense in the trial balance, if we were to find any outstanding expense in the trial balance, what does it imply? It implies that the accountant has passed the entry salary account debit to outstanding salary account. So he has increased the expense account. Now only outstanding expense account would be there in the trial balance on the credit side, representing what? Representing a liability. And where would liability go? Liability would be taken to the liability side of the balance sheet. Liability side of the balance sheet. So when there is an outstanding, what is outstanding expense? Expense at the end of the year, due, payable but not yet paid. That is an outstanding expense. What is the nature of this account? Since it represents the accounts of the person to whom some expense is payable, it is a personal account. It is known as a representative personal account. What is the entry with respect to an outstanding expense? We increase expense, we increase liability. Expense account debit to liability. What is the liability? To outstanding expense. If outstanding expense does not appear in the trial balance, if this adjustment is to be done outside the trial balance, basically we pass an entry, expense account debit to outstanding expense. Therefore, expense is increased by the amount and outstanding expense is shown as a liability in the balance sheet. If, however, outstanding expense appears in the trial balance, if it already appears in the trial balance, then this outstanding expense is only treated as a liability and taken to the liability side of the balance sheet. Let's look at this example. Shyam commenced his business on 1st April. On the 2nd of each month, he pays wages to his workers for the previous month. As at 31st March of the next year, his total wages paid amounted to 55,000. What would be the adjusting entry with respect to wages on 31st March? So what has happened? As at 31st March, he has paid a total amount of 55,000. He would not have paid the salary for March. The salary for March he will pay on the 2nd of April. Now totally if he has paid 55,000 for 11 months, we can conclude that the wages for March would be also 5,000. 55,000 for 11 months comes to 5,000 per month. So let us say that the wages for March, 31st March is 5,000 and that is outstanding as at 31st March. So what would be the entry for this 5,000? What do we have? We have an expense of wages 5,000. Expenses have to be increased, expenses debit, and on the other side we have a liability to pay these expenses, liability to pay these wages, and liability increase and liability would be credit. So basically our entry should be wages debit to outstanding wages, an amount of 5,000. This would be our accounting entry, expense account debit, liability account credit.